This is Investment Perspectives with Brad Kimes. Daily live streaming interactive. Featuring Mrs. Backup. Subscribe, hit the notification, smash the likes. Now, here's Backup Brad Kimes. Come on in.
Welcome back to Investment Perspectives, everybody. It is a happy Sunday morning. What you see in front of me is an article that is addressing a recent podcast to the American Bankers Association with Brian Brooks from the OCC. I want to remind everybody before I read this, Brian Brooks was the Chief Legal Officer at Coinbase. And I also want to remind everybody that the OCC is the Office of Comptroller of Currency. He is now the head of that department attached to the U.S. Treasury. I think we got a few things to talk about here today. Let's just get right to it because I think this could be pretty powerful, what we're reading here. Yesterday, the new acting comptroller of Office of the Comptroller of Currency, OCC, revealed to the American Bankers Association about his plan to unveil a new national payments charter, 1.0 in the fall of 2020. The OCC is a supervisory agency for the federal bank's charter, including institutions such as Wells Fargo and JP Morgan Chase. Now, stay with me. This does pertain heavily to cryptocurrency. In the podcast yesterday, acting comptroller Brian Brooks sat down with Evan Sparks, the editor-in-chief of the American Banking Journal, and started off his interview by sharing it's not clear that customers always want their financial services in a bundled form. Brooks continued, one of the reasons for a rise in fintech is an unbundling that is happening. Brooks has quickly proven himself to be a maverick in his new role. Sparks jokingly described Brooks at the beginning of the interview as an acting comptroller of cryptocurrency based on his background from working at Coinbase. And his focus on crypto at the OCC, Coinbase is the largest cryptocurrency exchange in the U.S. Over 30 million users, as well as the former employer of Brooks, who worked there as the chief legal counsel. In describing what customers want and the evolution of what banking is today, Brooks went on to note that the OCC for decades has said that a bank is an institution that engages in any of the following three activities: lending, deposits, and payments. For those companies looking for a national license platform for their payments business, Brooks announced that in the fall of 2020, the first version of a potential payments charter would be unveiled by the OCC. Such a charter would grant the institution a federal preemption or a federal money transmitter license, eliminating the need to go to all 50 states and obtain a license to operate in a state. This is fantastic, and it gets better. Brooks notes that the cheap deposits used by banks are less relevant for the more tech-enabled fintechs. Where these cheap sources of lending are less relevant, I don't buy the argument that granting a special purpose charter is somehow an existential threat to banks, says Brooks. Furthermore, Brooks notes that given how many of those in financial services are global businesses, it is harder for the U.S. to argue why these companies need license at a state-to-state level versus a federal level. So for version 1 of the payments charter, Brooks laid out a national version of a state money transmission license that provides the advantage of a national platform with preemption from the states. In version 2.0, approximately 18 months after rollout, Brooks estimates that these institutions would then be able to have access to the Federal Reserve. Last year, an article in Forbes predicted that 2020 would be the year when a showdown in court between the OCC and the states might occur on the OCC's authority. Last October, listen to this, the Southern District of New York ruled in favor of the New York Department of Financial Services, the NY DFS, against the OCC last year. It's at this time I want to remind you that Jay Clayton has now been appointed to the Southern District of New York as Attorney General. You heard that right. Brooks argued yesterday on the podcast when the OCC is granted an entity in a bank charter, this makes the institution eligible for FDIC insurance. He further went on to note that this did not mean the institution had to hold accounts protected by the FDIC insurance, but simply being eligible to do so under an OCC charter was the authority needed to provide a federal payments license. He's talking about being able to apply now for a federal license instead of having to go state to state, and now being opened up to the eligibility of not only having access to deal with the Federal Reserve, but also be able to provide FDIC insurance. This is remarkable. This guy is on it. It's amazing. And by the way, I'm not suggesting that there's anything colluding or anything like that by Jay Clayton being recommended to the U.S. Attorney General. Jay Clayton has had a very keen and strong, strict eye on how cryptocurrencies and ICOs make their way to market. And I think that's a healthy thing. And the reason I mention that is simply because he's very versed in what's going on in this young space. So having him at the U.S. Attorney General spot in the Southern District of New York will probably not yield the same answer that the OCC got last year. Not because of any kind of collusion, but because he understands the space. He understands these companies. He understands what's needed. And I think he understands what we'll have to see. But I think his vision will align greatly with a federal charter. Okay, so ultimately Brooks made clear he believes that the bank charter has to evolve to fulfill the national mandate of his agency. He also touched on the Community Reinvestment Act, the CRA, a law under which traditional banks must show efforts to meet needs of low or moderate income neighborhoods. Brooks described the idea of applying something similar to these payment charters. After Brooks described the evolving need of some customers and that the bank charter has to evolve to fulfill its national mandate, Sparks asked whether the preferences of the bank should also be considered as well as that of the customer. Sparks also asked how differing opinions at other federal agencies may create roadblocks as well. Brooks stated that he felt that after the Payment Charter 1.0 operates for an 18-month period, that the Fed and others would see how to regulate these institutions and become more comfortable with the idea of granting Fed access. Brooks did note that the Fed sees some amount of risk with this. They will want to observe for a while. Brooks conceded it will depend on how persuasive I can be. I spoke to Amy Lau, Senior Counsel, Global Business Development and Stablecoins at Coinbase, who in her personal capacity commented, a federal payments charter has the potential to democratize the playing field, promote innovation, and make financial services accessible to those that need it most in a way that still ensures there is strict regulatory oversight and protection for consumers. Lau opined that the National Payments Charter has the potential to allow for more U.S. businesses to compete and ultimately bring better products and services to market. Anyone that has to deal with state-by-state money transmitter licensing will know how difficult it is to navigate the patchwork of requirements, especially with regards to new technologies such as virtual currencies. Often, only the largest players have access to the resources required to undergo this incentive analytical exercise, and even then, there's no certainty that they have gotten it right, said Lau. This is really fantastic news here, guys. I mean, Brian Brooks said he saw a federal charter instead of this state-by-state business for all of these payment providers or virtual asset service providers, right? I mean, now we're talking about a national charter. Last year, the OCC got stuffed at the basket by none other than the Southern District of New York, ruled in favor of the New York Department of Financial Services against the OCC. I think let me pull this up. This is the letter that came out. Attorney General William Barr has released the following statement. I am pleased to announce that President Trump intends to nominate Jay Clayton from the SEC to serve as the next United States Attorney General of the Southern District of New York. come on in. For the past 3 years, Jay Clayton has been extraordinarily successful as SEC chairman, overseeing efforts to modernize regulation of the capital markets, protect Main Street investors, enhance American competitiveness, and address challenges ranging from cybersecurity issues to the pandemic. His management experience and expertise in financial regulation give him an ideal background to lead the United States Attorney's Office of the Southern District of New York, and he will be a worthy successor to many historic figures who have helped at that post. On behalf of the president, thank Jay for accepting this nomination and look forward to working with him soon. Fundamental news. Things we're looking for that show that this place is on a fast track to be legitimized. This article is talking about giving more access to the Federal Reserve with money transmission license, and then also having the option to exercise accounts protected by FDIC Insurance. This is not currently available. And this is incredible to me. I mean, this is really remarkable. And to know that, somebody with the experience and the knowledge about the crypto space coming from the SEC and understanding that and ICOs and what's a good company, what's not, what's a bad actor, what's a good actor. I just feel that this is absolutely fantastic to see that this correlates, his charter correlates with having to probably more than likely go back in front of this institution again, knowing that the Southern District of New York is now going to be headed up by Jay Clayton. This is phenomenal, I have to say. All right, guys, look, I'm going to cut it right there. Leave a comment below. Make sure you share this with somebody you know or on social media. I think this is a happy Sunday. Enjoy your day, guys. Talk to you soon.